بسم الله الرحمن الرحيم. My dear students, Assalamu alaikum wa rahmatullahi wa barakatuh. This is the fourth lecture as voice lecture before the last one, inshallah. We finished each of chapter 1, chapter 2, chapter 3. We are now subject to chapter 4, that is filing financial statements in commercial banks. Then the remaining is chapter 5 will be in the following lecture, that is the fifth one. Final financial statements, there are many, as for example the income statement, the cash flow statement, the change in equity statement, the financial position or balance sheet as a statement, and other statements, but we will concentrate on only two statements, that is the income statement and the financial position statement. And as you know that the accounting cycle either in commercial banks or any other entity begins by journal entries usually, then posting to ledger accounts. After that we have to make balancing for these accounts, to take these balances either debit or credit to prepare the trial balance with two columns, one for debit balances and the other for credit balances. And as we use double entry system in financial accounting, and the amount or value in the debit equals the amount or the value in the credit, so the balances as debit balances will equal in its total to the total of the credit balances. The items in the trial balance, in the debit balances, in the debit column, will be either assets or expenses and the like. But in the credit, you will find balances regarding revenues, liabilities, or equity and the like. That's why if you take the expenses from the debit balances and the revenues from the credit balances, you can prepare the income statement to get profit before taxes. After deducting taxes, you will get net profit after tax. Then you will make some distributions either for profits or reserves, reserves, and so on. Then the remaining will be retained earning, or the profit that can be added to the retained earning to get retained earning at end. That will affect the financial position statement. After taking each of expenses and revenues from the trial balance, the remaining is assets as debit balances, liabilities and equity as credit balances, from which you can prepare the financial position statement and to find that total assets equal total liabilities and equity. Take care that there is always adjustments. These adjustments should be considered with the trial balances to prepare the income statement and the financial position statement. And you have to consider well that any adjustment has two effects, a debit effect and a credit effect. Usually there is an effect on the income statement, the one in the financial position. After this introduction, we can say that banks are considered economic entities, that's to say, aim to achieve profits. And as any economic entity, the matter requires banks to recognize the results of its activities and its financial position periodically. So periodically may be monthly, quarterly, or yearly. The entities should prepare at least the income statement and the balance sheet or the financial position statement. Although there is final accounts to be prepared monthly and quarterly, but it should prepare the final accounts, income statement, for the period and the financial position statement at the end of this period as an accounting period, which is known as a full calendar year. A full calendar year. This means yearly preparation of the financial statements, either income statement or the financial position statement. Note that there is what is called contingent or conditional liabilities and commitments. This means التزامات طارئة. It appears by the uncovered net value. So letters of credit and letters of guarantee, it may be covered partially or wholly or uncovered. The amount of uncovered should appear in its uncovered net value in the balance sheet as at its end. This means that it will not affect the balance sheet itself, but after finishing the balance sheet, there is an item in the after the total of the asset side, and there is the same item but with its value in the other side. I mean, after the summation of the liabilities and the equity side. That's why we say again, the contingent liabilities and commitments appear by the uncovered net value in the balance sheet at its end after determining the total of the two sides. Consider well page 235 242. So from 235 to 242 you have to read well. Now please, before, try to bring your book now. Try to bring your book now, because after this slide we will begin our case that will be in page 242, 243, 244. Then the answer begins from 245 till the page 250 with some notices that you have to consider, which clarifying the statements in page 251 and 252. I will wait just 2 minutes to bring your book. Please, you have to open your book at the end of page 242, because just after this slide we will begin explaining the example. In addition to the obligation of disclosing any item that the rules require to be disclosed in the accompanying notes of the financial statements, the following should be considered. So you have to know well that the clarification notes that appear attached to each of the income statement and the financial position statement and even the other financial statements are so important and must be considered. And you have to consider also that all foreign currency transactions should be considered which result in cash flow. Treasury bills, that is أذون الخزانة, and other governmental securities should be considered. That is deductible at the central bank, that we can discount at the central bank. Financial investments held for trading, financial investments available for sale, financial investments or securities held to maturity, loans to customers and loans to banks, fixed assets depreciation and accumulated depreciation, other assets and other debit balances, as well as other liabilities and other credit balances that result from the adjustments, then other provisions. These are accounts, items should be considered, as well as the notes attached to the financial statements for clarifying these statements. An illustrative example that I told you in page 242 at its last, the last 6 lines. An illustrative example to clarify how to prepare each of the income statement and the financial position statement of a commercial bank. First, second, third. there are three main points we will consider. The first one, assembling the sub-items taking into account the impact of the adjustments relating to the clarifications numbers. That is page 245 to 148. So there are some adjustments relating to the balances and the trial balance. How to fulfill these adjustments to get the balances or the items, the accounts with the new balances after adjustments, to take them directly to the financial statements and affect these statements. So there are also some items that mentioned in the balance and the trial balance should be assembled, should be added together. For example, provision for different kinds of provisions should be added together. Suppose that you have customers' deposits as saving deposits, time deposits, period deposit. You have to add them together. So there are some items should be assembled together to get one item to mention in the statements. Second, preparing both of the income statement and the financial position statement, page 249 and 250. This means that after assembling the sub-items together, taking into account the impact of the adjustments, that is in the first step, we have to take these accounts after adjustment to affect the income statement and the financial position statement. Normally, what affects the income statement is what relates to expenses and revenues for the period. But what affects the balance sheet or the financial position statement is either assets with its two kinds, liabilities and equity with each item types in general. Then the necessary clarifications to indicate the impact of inventory adjustments on items concerned, page 255 to 152, and these clarifications are very important and should be attached to the statements, and we cannot read these statements without the clarification followed by it. Now, you are opening your book. I'm saying that solution of the illustrative example, which clarifies how to prepare each of the income statement and the balance sheet of a commercial bank. The following represent proposed balances appeared through a trial balance of a certain commercial bank for the year ended 30 June 2018. So June 3rd, 2018, these balances appeared, and you are asked to use the different adjustments that you will read with me from the book to prepare the three steps we mentioned in the previous slide. That is assembling the sub-items, taking the adjustments into account, preparing the income statement and financial position statement, then clarifying the different clarifications that we have to consider attached to these statements. Look at the adjustments, page 244, with the trial balance, which I will explain to you some items inside it before beginning our solution. This is the trial balance for the year ended June 3rd, 2018. Values are in 1,000 Egyptian pounds. As I told you, this trial balance I divided into two slides to be readable. We have debit balances and we have credit balances and the total of both. Consider that the items that appear as debit is either expenses which affected income statement or assets which appear in the financial position statement or in the asset side of the balance sheet. What about the credit balances? credit balances relate to items, either revenues affect the income statement, or other two main items affecting the financial position statement or the liability and the equity side of the balance sheet by the same name, liabilities and equity. So the debit balances either expenses or assets. The credit balances either revenues, liabilities or equity. These items are in detail. That's why some of these items should be taken together, should be assembled, should be totaled together to appear as one item, because they are sub-items, as I told you before. You will see while solving the case. This is the first part of the trial balance. This is the second part, and the total, as you see, 18,581,000, 18,581,000. This is the total of the balances, either debit or credit, that we will adjust using the inventory adjustments in page 244 to assemble the different items or sub-items in the trial balance with these adjustments to prepare after that the financial statements regarding income statement and financial position statement. What about the red figures appeared at the end of the trial balance? These are the two kinds of the contingent liabilities, either representing debit balance for the bank or the representing credit balance for the bank, that appears at the end of the balance sheet in the asset side and in the credit side after their totals, or in the financial position statement after adding the assets and after adding the liabilities. What are the different adjustments I have and how to prepare the three steps? The first one, assembling with the adjustment, then preparing the income statement and the financial position statement, then the different clarifications. At the book, please. Regarding the trial balance, because I can't go back to the trial balance in the slides for the video we are preparing. Your trial balance in page 243, the adjustments 244. I will read the adjustments with you. Then I will begin assembling the sub-items, taking into account the impact of the adjustments relating to the clarification number. The clarifications numbers are the numbers appeared in a certain column for this reason through the statements to tell you what are the adjustments that affected these items or accounts. He said here, provision number one, provision for potential obligations that its purpose has been ended, 66,000. As the purpose of these provisions are ended, so we have to consider it as other revenues. So we have to decrease this provision and to add it as profit. What is related to the bank of returns? So return for the bank, revenues. For balances with foreign banks, so related to foreign currency, 39,000, while the return on foreign banks balances 33. So what should affect the income statement as revenues of the bank in the different currencies, 39,000 and 33,000 should affect the income statement, 39 and 33. But we have to consider well, what is the amount affected the trial balance? What is the balance of what is the actual balances happened and appeared in the trial balance? We may find the 39,000 regarding revenues of balances of foreign banks, 39 also. So there is no adjustment. But we will find it 31,000 regarding return of the other. This is foreign banks. While the return on foreign banks balances 33, you will find it 31. So 31 and the what should be 33. So there are unreceived credit revenues 2,000 should affect the balance sheet or the financial position statement. We will explain it together. Number 3, the salaries paid in advance 2,000. So the item of salaries appearing in the trial balance includes 2,000 paid in advance. I want the salaries related to this period only. So I have to deduct the 2,000 from the salaries appearing in the trial balance, and the 2,000 will appear as other debit balances in the asset of financial position statement. There is accrued current expenses 6,000. So the current expenses, we have to add 6,000 to it. Then we have to record these 6,000 in the liability side of the balance sheet, or the liability part of the financial statement in the other credit balances. Fixed assets depreciation amounted 12,000. As we have fixed asset depreciation, it affects the income statement, and we have to add it to the accumulated depreciation provision to deduct it from the asset or to appear in the liability side of the balance sheet. But we prefer, as done always in commercial banks, to deduct the accumulated depreciation wholly after adding the 12,000 from the fixed assets value in the asset part of the financial position statement. Revenues owed local banks 104. So these revenues on local banks, so they are revenues for us, owed on, not owed for. So we have to add this 104 to our revenues in the income statement, and to affect the unreceived revenues as assets in the financial position statement. Customers' bad loans appeared while carrying the adjustments amount 6,000. Bad loans means bad debts. Bad debts normally, when appearing in the adjustments, we have to deduct from accounts receivable, if you remember in financial accounting regarding commercial entities. In commercial banks, we call it bad loans. So our loans, we have to deduct the bad loans, 6,000. The 6,000 should be dealt with through the provision for doubtful debts. So provision for doubtful debts should be decreased by this 6,000. I mean, I have to close the bad loan 6,000 in the provision. The remaining of the provision, I need it to be for next year, as mentioned in number 6 here, 40,000. So I have to add provision of the difference between the balance existed after closing the 6,000 and the 40,000, and this appears in the income statement, and the provision will be 40,000 in the financial position statement. Regarding reserves for the year amounted 20,000, including 6,000 legal reserve, and the remaining, 14,000 for emergency reserve. So the 14 and 6 will be considered as distributions of profits after tax profits. We will deduct 6 and 14 as provisions for legal reserve and for emergency reserve, and the reserves in the financial position statement will be increased by the 6,000 and the 14,000 regarding these two items, and we may assemble all the reserves together in one item. He told me that in addition to management's rewards and distribution belonging to workers, so these also represent net profits distribution, so we will deal with them together with the reserves as the 14 and 6, the 6 and 14,000 legal reserve and emergency reserve, plus the 12,000 as distributions for management and workers. Number 8, revenues of the balances out the proportion of the cash reserves requirements of the central bank amounted 8,000. The central bank imposed on all banks to keep a certain percentage of cash as an account in the central bank. Suppose that the share that I have to put as cash in the central bank is, suppose, 1 million. but it became 1,100,000. So there is 100,000 excess. This excess means that I have to take revenue on it. I have to take interest on it. He told me that this revenue equal 8,000, so I have to consider revenues on accounts in the bank 8,000 in the income statement, and the 8,000 not yet received, so we have to add to banks balance on other banks. Taxes provision for the year amounted 78,000, so the 78,000 should be deducted from operating income before getting the net profit, and it will appear as a provision in the liability side. The last item, returned earning of the year's profits 100,000. As returned earning of the year's profits 100,000, so we have to consider to get the returned earning at end of this year, that is ended June 3rd, 2018. I will begin the solution with you, but after reading the 3 points at the end of 244 after the adjustments, and I told you before our solution that at the first beginning we would like to point out that the order of the solution will be as follows: assembling the sub-items, taking the adjustments into account, preparing each of the income statement and the financial position statement, then presenting the necessary explanations for clarifying the values of items affected by the adjustments through the clarification numbers in these statements. Now you have to look with me in these slides. First, assembling the sub-items, taking into account the impact of the adjustments relating to the clarifications numbers. Consider that these slides, there are some mistakes in the book with you. We are correcting here. So you can correct your book according to the items written here. I think all the correction is in the names of accounts, not in the values itself. Cash on hand and balances with the central bank. Clarification number 2. That is found in the statements, clarification number 2. Cash on hand balance from the trial balance 154,000. Then we have balances with the central bank, that is the obligatory reserve. The total is 2,006,000. 2,060,000. But there is 160,000, as he told me, out of the obligatory reserve. So deducting the 160 means that the reserve with the central bank is 1,900,000 to be added to 154,000 cash on hand. So total cash on hand with and the cash in the central bank 2,054,000. What about the 160,000 that we deducted from the balance on the central bank? We have to add it to the bank balances, as you will see in the next clarification. Bank balances, clarification number 2, 7 and 11. So 2, 7 and 11 are 3 clarifications. You will find them in the clarification column in these statements, and you will find them in the clarification as explanation for clarifying these items after the statements preparation, as you will see now. Balance with the local banks 316 plus 104,000 in the adjustment, that is revenue owed on local banks. I explained it just before explaining this slide. Balances with foreign banks, there is no adjustment, so 930,000. Balances with the central bank 160, I told you, outside the compulsory reserve ratio, that is deducted from the item up of this slide. So the total 1,510,000 for bank balances that appears in the financial position statement as the 2,054,000 that will appear as cash on hand and balance with the central bank in the asset of the financial statement. Then loans and advances to customers and banks, and he wrote net. What is meant by net? This means net after deducting the provision for loans, the provision for doubtful debts. Clarification number 9. Loans to customers, 6,460,000 pound minus 6,000 bad loans, as I explained to you in the adjustments. So this is the result. Loans to banks from trial balance, 3,200,000. Discounted commercial bills, so 760,000 from the trial balance. Discounted commercial bills, why we are taking it here? Because this represent loans to customers, because we discounted commercial bills for them until we collect these bills at maturity. Gross total 10,414,000. If deducting provision for loans 40, it gives me 10,374,000. Can we take the gross total 10,414 and record it in the asset side without deducting the 40? You may do so, but the 40 should appear in the liability and equity side or in the liability and equity part of financial position statement as provision for loans. But in commercial banks, normally we deduct the provision from the total of these loans and advances to get the net as it is written in the title, loans and advances to customers and banks between two brackets, net value. Then we have debit balances and other assets. Always, if you remember, in first year accounting, financial accounting, and in partnership as well as other financial accounts, financial statements in financial accounts branches, as corporations, I'm sorry, I forgot, you find that in the balance sheet, the asset side, you have fixed assets, current assets, and other debit balances. In the liability side, you find equity, it means capital, reserve, retained earnings, liabilities, long-term, short-term, and other credit balances. So the other debit balances in the asset side and other credit balances in the liability and equity side represent the effect of adjustments regarding unpaid expenses and revenues received in advance in the liability side, other credit balances, as well as expenses paid in advance and unreceived revenues appear in the asset side with other balances, as we will see. So here, debit balances and other assets as explained in front of you. Clarification number 4 and the clarification number 8. Various debit balances. This is from the trial balance. Advance payments for suppliers contracts from the trial balance. Accrued revenues 8,000 from the adjustments. Salaries paid in advance 2,000 from the adjustments. Total equal to 100,000 to appear at the end of the balance asset side. Now, fixed assets, net. What is meant by net? This means I will not mention fixed assets in the asset side and provision for accumulated depreciation in the liability side. No, I will deduct the accumulated depreciation from fixed assets in the asset side. That's why it will be net fixed assets. 470 from the trial balance, 470,000. This is the value of fixed assets minus 70,000 all the accumulated depreciation provision plus the new depreciation of this year, 12,000. So accumulated depreciation equal 82,000 to be deducted, and the 12 will be deducted, will appear in the income statement as expense of the period. Now, provision for loan. Clarification number 9. The amount allocated as a balance in the trial balance 36. Deduct customers' bad loans 6,000. We explained in the adjustments through the book. Add the provision value complementing provision value 10 to give total 40,000. I have to stop what here. The amount of the provision was 36 from last year. If covering the 6,000 of bad loans, the remaining will be 30. The provision needed for this year is 40. As I have net of 30, I have to increase by 10,000 that appear in the income statement, and the 40,000 as a whole will be deducted from the loans as provision to get net loans. Legal reserve, clarification number 10, I have 110 in the trial balance and the 6 new reserve, so the total 116. The new reserve we dealt with through the adjustments when he told me new reserves 20. 6 for legal reserve and 14 for emergency reserve. Now the emergency reserve, its balance is 196,000 in the trial balance plus the new one 14,000 new reserve gives 210,000 as you see. Now reserves and management and staff or laborers share in profits. I told you that all the reserves represent distribution of profit. And what about distribution of profit for management and staff share? Will be added together. So this is clarification number 10. General reserve, legal reserve 6 of this year, emergency reserve 14 for this year, the total of 20 that appear in adjustment number 7 in page 244. Then 12,000 management bonus and distribution belong to workers or employees, so the total 32,000 to appear at the end of the income statement as distribution of profit after tax. Creditors distributions, clarification number 10 and 13. The balance in the trial balance is 42,000 plus management bonus and workers dividends plus shareholders dividends from the income statement, the total 235,000. What about creditors distributions? These are distributions should happen, but they didn't receive these distributions, either the stockholders or the management or laborers, so it will be as a liability, in credit balances, creditors distributions, because they didn't receive it yet, so it will be liability until distributing it for them or giving it for them. Returned earnings, this means that the balance in the trial balance plus transferred from the year's profits from the income statement. So the income statement, the last item in the income statement after preparation is 118,000. Where? That is after distributing the 100,000 of. So they transferred from the year profits from the income statement 118. Why? Because the result of the income statement, if you look to the income statement in your book, you will find that I have an income of the year, then I deducted the taxes provision 78, clarification number 12, we got net profit 313, we added reserve, reserve and share of management staff, it gave me distributed profits 281, then returned earning at beginning, returned earning at end 100, so the remaining distribution to shareholders 181. So the total will be 18 plus 100 that is transferred from the year profits that is appearing in the income statement before the distribution of shareholders, the last item, the item before retained earnings, and this is the adjustment number 10 in page 244, returned earning of the year profits 100,000 plus 18 the balance in the trial balance, so the total is 118. Financial investments for trading. Clarification number 14. The balance in the trial balance 262. Deduct valuation differences from the trial balance. He said there is valuation difference. The valuation difference was 12,000. If you look in the trial balance in page 243, 243, search with me to find 12,000. 12,000, we are searching for it now. 12,000, 12,000, 12,000. Yes, in the credit balances before the total you have 11, 4, 13, 20 and 12. The 12, that is figure number 5 from down. Evaluation of financial investment held for trading difference. This 12,000 in the credit, so it represents something should be deducted from the 262 that's taken from the debit balances. 262, that is in 1, 2, 3, 4, the fourth figure from down regarding the trial balance, that is financial investment held for trading, to get its value 250. Plus balance of investment fund securities. This is another balance in the trial balance. So add it together as subtotals to give the total 346,000 to appear in the asset side. Financial investment for maintaining. This is a new kind of financial investments of the bank. Clarification number 15. The balance from the trial balance is 1,800,000. Search for it if you want. Plus bank fund investment securities. That is صكوك صناديق الاستثمار بتاعت البنك. So the total is 1,836,000. Both the two items or the two balances are taken from the trial balance. Now, customer deposits. Customer deposits means a liability of the bank. That's why the customer deposits, you will find it in the credit balances of the trial balance. Many items we add them together. Just we add them together, no adjustment regarding it. Clarification number 16. Current deposit balance 2 million. Saving deposit 1,480,000. Time deposit and notified deposit 9 million. Saving certificates 1,570,000. Deposit certificates 90,000. The total appearing in the liability and equity side 14,140,000 back. Receivables and bank deposits. Receivables and bank deposits. Clarification number 3. Deposits of local banks 200,000 from the trial balance. Deposits of foreign banks 810,000 plus 2,000. Do you know what about the 2,000? The 2,000 appeared in the adjustments. You will find it in number 2 in the adjustments, page 244. When he said that the foreign bank return or the return on foreign bank balances 33, but in the trial balance it is mentioned 31. So we received 31 only, so still 2 should be added to the balance. So we added deposit of foreign bank 2 plus 810 from the trial balance gives 812. The total 1,000,012. I think we are about finishing to prepare the income statement and the balance sheet, the financial position statement. Now, returns on loans and certificates of deposit and savings and bank balances. Certificate number 7 and 11. Revenue of deposit certificates of the bank equal 180 from the trial balance. Return of the bank balances with the local banks 400,000 plus 104,000. If you want to look for the 104,000, you will find it in the adjustments in page 244, just in clarification adjustment number 5. Revenues owed to the bank 104. So we have to add it to the revenues of 400. So the total is 504,000. Returns of the customer loans So the customer loans, the returns equal 552,000. Return of foreign bank balances 39,000. All are from the trial balance. The total is 1,275,000. Other credit balances and other obligations. This is as other debit balance in the asset. It will be in the liability side regarding adjustments. We have other credit balances 178 from the trial balance, and other accrued expenses 6,000 appear through your adjustment. So the total 184. The last two part of the first solution, dividends of stocks and investment securities owned by the bank. So these are revenues for the bank, clarification number 17. Return on financial investment held for trading 120 from the trial balance. Return financial investment of financial statement held for maintaining from the trial balance. Return on investment funds owned by the bank 13,000 from the trial balance. So the total is 193,000 pounds. Administrative and general expenses, I have to add these items. Wages and salaries 120,000, but there are 2,000 paid in advance in adjustment number 3, page 244. So if deducting the two, so what relates to the period 118, and the 2,000 are added to the other debit balances in the balance sheet. Material and supplies requirements, but we didn't receive, so paid in advance 180. Then miscellaneous current expenses 100,000 plus 6,000 accrued. That is the 6,000 mentioned in the adjustments. So the total is 404,000. Still, there are three adjustments. Cost of deposits, certificates of deposits, savings accounts, and loans from banks and others. Clarification number 3. All are balances from the trial balance except a small adjustment. Deposit certificate return from the trial balance. Other bank balances return from the trial balance. Customer deposit return from the trial balance. Saving accounts return from the trial balance. Foreign bank balances return 31,000 plus 2. Where is the 2? Look at adjustment number 2. The second, third line. He said return on foreign balances, bank balances. It should be 33, but it appeared 31. That's why we make it 33, and the 2,000 appear as other debit balances in the asset side. The total 1,040,000. Other revenues related to the activity, clarification number 1 and 8, 20,000 plus 66. What about the 66? Ended purpose potential provision. That is the first adjustment in your page 244. Plus 8,000 accrued revenues we didn't receive yet in your adjustments also, so equal 94. Other provisions, clarification number 1 and 12, 146 from the trial balance, 78 from the trial balance, 66,000, that is the purpose potential provision, so the total is 158. 66 should be deducted. I'm sorry, it is added here, but the result is correct. So 146 plus 78 minus 66, it gives 158. Make this sign, please, before 66, minus, not plus. Second, the second step, preparing both the income statement and the financial position statement. We can prepare the two mentioned statement as follows. Just, you will get all the new balances prepared just now in the first step regarding revenues and expenses to affect the income statement with the distributions at its end. Then all the items you adjusted as assets, liabilities, or equity will appear in the financial position statement. There are some items appeared in the trial balance and no adjustment, no clarification in step 1, so you have to put them in their places. The following, this is the bank income statement for the year ended, so, and I have a comparative year at 30th of June last year, 2017. If you have these figures, you have to compare them together. The clarification number in the first column that we explained in the first step, and the values you have, then the remaining part of the income statement. This is net profit before taxes 391 minus tax provision 78, clarification number 12, gives net profit after tax, reserve and share of management and staff, distribution of profits, or distributable profits, returned earning 100, so they distributed for his shareholders 181. Regarding the financial position statement, values are in thousands. I have also a comparative year to compare with the June 3rd, 2018, if I have the figures, so it is very good to compare. The clarifications in the first column, these are the asset side, at its end the total 17,057,000, then the contingent liabilities and exchange for contracts and commitments. The remaining is liabilities and equity, the same total 17,057, then contingent liabilities and exchange for contracts and commitments. You are not in need to read with you the necessary clarification to indicate the impact of inventory adjustments on the items concerned. But first, you have to consider well that each adjustment should have double effect. Double effect. As I explained in the adjustments, this is number 1, number 2, they are book, or 14, they are mentioned in pages 251, 252, and they are, as I explained to you in the adjustments. Hoping you good luck, and see you in the class, I hope, or in the last voice lecture, and see you during the exam. Everything will be okay. Good luck. Thank you very much, and I will see you afterwards.